Hello and welcome to the Deep Dive. Today, we're taking a closer look at the dairy sector, specifically a significant player spanning India and Africa. Dodla Dairy Ltd. You've sent us a stack of their most recent reports, financial results, a press release, an investor presentation, all pretty fresh from July 21, 2025.
Yeah, that's right. And our goal today really is to cut through all the data, the industry jargon, and help you understand what's actually important in these Dodla Dairy updates. We'll look at their latest financials, some big strategic moves they're making, and what it all means for them and, the wider dairy market.
Okay, sounds good. So if you're ready to get up to speed quickly, let's jump right in. Q1 FY26 financial snapshot, the headlines. Right, so let's start with the numbers, the most recent results for the quarter ending June 30th, 2025. What's the main takeaway?
Well, the big headline, honestly, is that Dodla Dairy hit its highest ever consolidated operating revenues. We're talking 10,069 million. That's just over 10 billion rupees. That's a pretty strong 10.5% jump compared to the same quarter last year. So, significant top-line growth.
Highest ever revenue. Okay, that sounds positive. But I'm also seeing, looking through these reports, some shifts on the profitability side. How does that square up?
Yeah, you've hit on it. That's exactly let's call it the mixed picture we need to unpack. While the revenues surged, their consolidated EBITs, earnings before interest, taxes, depreciation, and amortization, that actually stood at 825 million, and that's down quite notably 21.5% from the same quarter last year. So the EBITDA margin fell from 11.5% down to 8.2%. And profit after tax, PITA, also dipped slightly, down 3.3% year over year to 629 million. The PITA margin landed at 6.2%. So yeah, the big question is why this disconnect? Strong revenue, but consolidated profits taking a hit.
And how did that translate into earnings per share, the EPS?
All right, so the consolidated EPS for the quarter came in at 10.4. That's down a bit from 10.9 in Q1 of the previous fiscal year. But, and this is, I think, really important, their standalone results, which mostly reflect the Indian operations, they actually showed growth in profits. Standalone net profit after tax went up to 623.64 million from about 542 million the year before.
Okay.
And the standalone basic EPS also increased to 10.34 from 9.11. So it suggests, different things were happening in India versus the overall picture, including Africa. 2, unpacking the performance drivers, why the margins shifted.
Okay, that standalone point is interesting. Let's dig into that mixed consolidated performance then. What were the main reasons for that margin squeeze we saw? Why revenue up but profitability down overall?
Well, broadly speaking, there were a few key factors playing into those consolidated margins. A big one was procurement costs, basically what they pay for raw milk. Those prices grew faster, about 9.5% year over year, compared to the prices they were getting for their finished products. Realization prices only went up by 3.2%.
Right. So they were paying proportionally more for the raw stuff than they could charge for the final goods. That makes sense.
Exactly. That directly squeezed their gross margins.
Okay. So beyond that raw material cost pressure, what else was going on?
Another pretty significant factor was the product mix, particularly around their value-added products, or VAPs. Now, overall VAP sales actually grew nicely by 12%, hitting over 3.5 billion and making up 36.2% of their revenue. But within that, there was a higher proportion of bulk sales, things like skimmed milk powder, SMP, and butter. And these bulk sales happened when prices for those commodities were actually falling. So the company kind of strategically decided to liquidate some of that inventory, which is prudent for the balance sheet, but it definitely impacted the overall profit mix.
Got it. And I think you mentioned seasonality played a role too, the weather.
Oh, absolutely. A big role this quarter. Those high-margin products you typically see boom in the summer, things like curd, lassi, ice cream, their contribution was lower than last year. And that was pinned on the early and quite extended rains in India. Q1 this year apparently had something like 35 to 38 rainy days.
Wow.
Yeah, about 10 days more than the same quarter last year. So that directly hit demand for those summer products, shifted the portfolio mix, and even pushed down average milk prices a bit in the market.
Okay, so product mix, procurement costs, weather. Were there other operational costs ticking up?
Yes, definitely. Their EBITDA margins also felt the pressure from increased employee costs. That was down to, standard annual increments, but also hiring new people across different teams, procurement, sales, and staffing up the expansion at their plant in Kenya.
Right, the new plant.
Exactly. And then there was also a rise in what they call other expenses, things like higher advertising spend, transportation costs going up, and increases for contract workers. It all adds up,
Sure. But despite all those pressures, the profit after tax, the PAT, didn't fall as much as the EBITDA. How did that happen? It recovered a bit.
Yeah, that slight recovery, or less of a fall,
Oh.
in PAT was mainly thanks to an increase in other income. Mostly, that came from interest earned on their investments.
Mm.
And also, interestingly, a provision reversal related to GST on flavored milk.
Ah, okay.
Plus, their tax expenses were lower, partly because profits were lower, but also due to things like reversing some deferred tax on capital gains and getting some tax refunds from previous years. 3, volume and segment performance. Deeper dive into operations.
Okay, so we've got the financial picture and the sort of why behind the margin shifts. Let's look at the operational side now. What about the actual volumes? How much milk did they handle? What did they sell?
Yeah, this is where you see some real underlying strength, actually. Dodla achieved its highest ever milk procurement volume, 18.7 lakh liters per day LLPD. That's 1.87 million liters every single day, which is up a solid 6.2% compared to last year. So they're getting more milk. Average milk sales volume was also up by 4.9% to 11.9 LLPD, so selling more liquid milk. However, going back to that product mix point, the volumes for specific high-margin VAPs like curd, average curd sales actually decreased by 3.2% year over year, down to about 452 metric tons per day, MTPD, which ties right back into that impact from the early rains we talked about.
Right. So more milk coming in overall, but the mix of what they sold, especially the profitable stuff, was hit by the weather. How did things look across their different geographies? India versus Africa?
Well, the Indian dairy business, as we've kind of covered, was definitely affected by those seasonal issues, the early monsoon. Their Africa business, though that's Uganda and Kenya, showed really strong revenue growth, up almost 27% year over year.
Okay, impressive top line there.
Yeah, but margins in Africa were also under pressure, mainly because of the startup costs and phase for that new plant in Kenya. Right now, the focus there seems to be grabbing market share, so they're using, strategic pricing. Plus, they also faced higher milk procurement costs in that region, too.
Got it. And then there's Orgafeed. That's their allied business, right? Cattle feed. Did that help cushion things?
It really did, yeah. Orgafeed continued to perform very well, delivered a strong top line, $411 million. Revenue grew by nearly 30% year over year. Impressive.
Wow.
And what's even more striking is its EBITDA growth. That shot up by over 84% year over year, hitting $72 million, which gave it a really healthy EBITDA margin of 17.6%.
Nice.
So yeah, that segment selling cattle feed and related products definitely provided a good partial offset to the margin challenges they saw elsewhere in the dairy operations. 4, strategic moves. The Osam Dairy acquisition.
Okay, shifting gears a bit to strategy and the future. There was a pretty major announcement this quarter, right? A big acquisition. Tell us about this company, HR Food Processing Private Limited, the one that operates under the Osam Dairy brand.
Yeah, this is a significant strategic move, absolutely. It signals where they see future growth coming from. Dodla's board approved buying a 100% stake in Osam Dairy. The price tag is $2,710 million, so 2.71 billion rupees.
That's a chunk of change.
It is, and it's expected to be an all-cash deal, closing pretty quickly within the next month or two.
So, strategically speaking, why this company? Why Osam? Why now? What's the thinking there?
Well, it lines up really well with Dodla's stated long-term strategy, which includes both growing organically and making strategic acquisitions like this one. Osam Dairy has a really strong presence in Bihar and Jharkhand. These are regions in eastern India considered high-growth markets for dairy.
Okay, why high growth?
A couple of reasons. One, milk consumption per person there is still quite low compared to the rest of India. So there's just a lot of room to grow demand. And 2, the market there is shifting quite rapidly, apparently, from the sort of traditional unorganized milk sector towards branded, packaged, organized players like Osam and now Dodla.
Right, so it's about getting into a specific geography, market penetration in an area with potential.
Exactly. It's geographical expansion, yes, but Osam also brings a lot to the table. They have a diverse product portfolio, good quality infrastructure, 3 processing plants, 19 chilling centers, a network of 1,000 collection points tapping into over 25,000 farmers. So this gives Dodla immediate strategic access. It allows for supply chain synergies, improving milk collection and distribution in these really crucial new markets. And just to give you that context again on potential, per capita milk availability in Bihar is about 274 grams a day. Jharkhand is even lower at 195 grams. The Indian average is way up at 439 grams.
Big difference.
Huge difference. It just highlights the opportunity you see there.
Yeah, sounds like a very calculated move into a market that could really boost their overall size and what they offer down the line. Be the foundation. Dodla Dairy's strengths and future focus. Okay, so zooming out a bit from the quarter's results and the acquisition. What are the core strengths you see in Dodla Dairy's overall operation? What's their foundation?
Well, one thing that really stands out is just how robust and integrated their supply chain is. It goes all the way from what, over 1.4 lakh farmers, that's 140,000 farmers, across more than 9,000 villages,
Wow.
all the way through to their 16 processing plants. And this kind of vertical integration lets them keep tight control over quality every step of the way. They use things like TPRS-enabled milk analyzers right at the village collection centers and do advanced tests for adulteration at the plants. Plus, they seem to have built strong, transparent relationships with those farmers, paying them directly, providing cattle feed through OrgaFeed.
Yeah.
That builds loyalty and helps ensure quality supply.
And I also noticed in the presentation a fair bit of focus on ESG, environmental, social governance stuff. How significant is that for them?
Yeah, it seems pretty integrated into how they operate, not just an add-on. They're actively using renewable energy. Solar panels supply about 14% of their power needs. They even convert waste sludge from their effluent treatment plants, ETPs, into biogas to use as fuel.
Interesting.
And they clearly focus on water management, too, treating and recycling over 600,000 kiloliters of water every year. They actually won a national award for energy management, which suggests it's, a genuine focus. It helps with efficiency, but also builds that sustainable brand image.
Right. So this whole approach, farm to consumer, integrated with that sustainability lens, that seems to underpin their strategy moving forward, too.
Exactly. Their stated priorities really build on that foundation. They talk about expanding production capacity further, deepening that direct milk procurement model, getting even closer to the farmers, strengthening their brand, expanding their reach, especially with the OSAM acquisition now, and a continued really strong focus on those value-added products, the VAPs.
Yeah, the VAPs seem key.
Definitely. That segment has grown at something like a 27% compound annual rate over the last 4 fiscal years, FY21 to FY25, driven by all the usual things, urbanization, rising incomes, but also post-COVID, a bigger demand for hygienic branded dairy products. And they're actively pushing that using different advertising channels, expanding into e-commerce to really capture that growth. Outro.
Okay, so we've covered quite a bit there on Dodla Dairy's Q1 for fiscal 26. It feels like we've seen a company that's definitely expanding its reach, navigating some pretty tricky market dynamics like the weather and costs,
Right.
but also making these big strategic bets on the future like OSAM while keeping that core operational strength and sustainability focus.
Yeah, I think that sums it up well. They certainly face headwinds this quarter on the margin front. The early rains hitting high-margin VAPs, procurement costs rising faster than selling prices. Those were real pressures. But the overall revenue growth is still strong. Segments like OrgaFeed are performing exceptionally well. Yeah.
Yeah.
And that OSAM acquisition, that's a clear signal about their ambitions in Eastern India, a really promising market. It sets a clear path for future growth and diversification, I think.
Absolutely. Well, as you reflect on this deep dive, maybe something to mull over. How might these regional climate patterns we saw impact them and just local consumer tastes in general? How might those increasingly shape the global strategies of companies like Dodla? And what sort of opportunities or maybe challenges does that create for innovation across the whole dairy industry? Just some food for thought.
Good question to end on. Well, thank you for joining us on this deep dive.